Good afternoon and welcome to the FX Week Ahead live market analysis with myself, Giles Coughlin. We're going to be looking ahead to see what is in front of us, and we're looking to quite a varied week, and there's quite a lot of potentially market moving events happening. So we're going to be getting stuck into that shortly. But before we do, I just want to put up the quick disclaimer explaining that as I go through the events that are coming up, this is primarily an educational webinar. The idea is for you to see the perspective that a professional trader takes on the market as they look ahead, and the kind of factors that influence us in making a decision. So that's just to explain. It's not trading advice, but it's meant to be an educational tool. So it's just important that I say that and give you folks a chance to look at that. It'd be also helpful if anyone could tell me if they can hear me. So if you could just let me know. Hi, Catherine. Hi, Emily, Manuel, Hashik, Nadir, Noob, Simon. Welcome, guys. Yeah, oh, that's great. I'm obviously coming over loud and clear. Hi, Nadir. Good to see you back. That is lovely. Thank you. Tan, we might... that's a question that we won't cover on this webinar, Tan. Try to keep questions on the webinar we're looking at. We're not going to be looking at much of the Australian dollar this week. Maybe the thing to come, Tan, for you is to come along to the workshop on the Tuesday. Would be better for those kind of questions. Okay, guys, great. You can hear me loud and clear. So let's get stuck in. Before we look at the week, we're going to look at last week and what happened over the weekend. Now, over the weekend, we had some anticipated event, which was the 27 EU leaders met, and they've agreed on a Brexit deal for Britain. So obviously the Brexit scenario has been a preoccupation for the market, particularly with regard to the Great British Pound. And the latest chapter has been this. The EU leader says, yes, we've agreed that Brexit deal on principle. And so Theresa May now has the next bit, and this bit is the tricky bit. The agreement wasn't so controversial. There was some concerns over Spain and Gibraltar, but that's all been ironed out. The Brexit deal is agreed in principle. But what Theresa May now has to do, she has to get the vote through the UK Parliament. And the situation is expected that Theresa May will not be able to get enough votes to agree the Brexit deal through the UK Parliament. So that's what the analysts and political commentators have done. They've looked ahead, they've seen what votes she has, and the anticipation is that Theresa May just doesn't have enough votes. So the date that I saw for the vote to be mooted through UK Parliament was the 10th and the 11th of December. So that's the date that Theresa May has to work with. She's got between now and then to try to persuade the UK Parliament that the Brexit deal she secured with Europe is the best deal. So that's the situation that we're in. Theresa May's got to get the vote through UK Parliament, but doesn't look like the UK Parliament is going to accept the deal that Theresa May has secured. So looking at the pound, this is quite an interesting scenario now. I'm just going to move that webinar out the way. Now, looking at the pound chart. Now, notice on the daily chart, what we've seen, just get rid of that Fibonacci level. What we've seen is that price has been rejected at the 200 moving average once, twice, 3 times, and then most recently price was rejected at the 100 moving average. So in the near term, we have 1, 2, 3 places of resistance ahead on the Great British Pound. We also have, from this high, we also have a place of confluence at the 61.8 retracement level from the 7th of November highs. Okay, so there's the 7th of November highs, drawing a Fibonacci retracement down to the 15th of November lows. then this area here and this area here look very interesting places for potential shorting opportunities on the pounds. Now, in the near term situation, there doesn't seem to be a positive outlook for the pound, because this is the heart of the problem. Is Theresa May has to try to get the vote through the UK Parliament, but the UK Parliament is almost certainly going to reject the vote. So the traders understand that. So what traders will be looking for? They'll be looking for opportunities or places to get short. Now, shorting from down these levels is quite tricky, okay? There's some quite good support down at this level, and initiating new shorts here is not the most sensible move. So if you're looking at, and anyone looking to regain shorts on the daily chart, you want to look at this 50% Fibonacci retracement level in line with the 50 exponential moving average, and the 61.8% retracement level, which is also in line with the 100 exponential moving average. So these two places here and here are good potential places to initiate shorts into that 10th and 11th of December UK Parliament meeting, which is expected to reject Theresa May's proposal. So that is the latest with the pound. That's something to be aware of. Remember, the pound, if you're trading the pound at the moment, is very susceptible to headlines. So the things for us to be looking out for is things like, well, is there a change amongst the members of Parliament in the UK? Is it looking like Theresa May could get the vote through? If it becomes clear that Theresa May would get the vote through, then the pound is going to appreciate. So we can start to see different potential moves that could come out in the next kind of couple of weeks. So pound's really coming into focus now. Make sure you keep it on your focus, especially if you're trading the pound at any moment. So that's a very important factor, Brexit scenarios. On to the next. Now, last week we also had the release of the European Central Bank's minutes. And the importance of reading the minutes of the central bank is you get to understand what the central bank is thinking. And we did see what they were thinking. And what they said was that risks are tilted to the downside for the European Central Bank. And I just took a couple of highlights from the minutes. Here, I put one of the things they said is that while there was broad agreement that at present the risks to growth could still be considered to be balanced overall, a remark was made that a number of arguments pointed towards risks to the growth outlook tilting to the downside. Now, the reason this is significant is originally the European Central Bank have been saying the slowdown in the first quarter and even the second quarter has just been a slowdown in momentum. Okay, but now the minutes are starting to say that the growth outlook looks tilting to the downside. Okay, and they also said, look, against this background, we've got Brexit, NAFTA, US-China trade war, EU-US trade negotiations. That was all the things that were going on at the time the minutes were written. The members considered that the uncertainties related to global factors remain prominent, and the risks related to the external environment were assessed to be tilted to the downside. Okay, so in the last minutes, we saw that the ECB was starting to shrink on their outlook for growth. Okay, so that's an important key to understand about the European Central Bank. And then since those minutes, we've seen more downside. So the third quarter for Germany's GDP was minus 0.2% versus minus 0.2% expected. Now, what was particularly bad about Germany's GDP numbers, and this is what resulted in a sell-off of the euro, was the way those GDP figures were constructed. And the real weakness in those figures was due to their exports. You see, the exports really led the decline. Look, minus 0.9% fall in exports versus 0.3% that were expected. So in other words, Germany is exporting a lot less than was anticipated. Now, this is to do with the US-China trade war, the slowdown in global growth that many people are reporting on. And see, in Germany, the domestic demand was what boosted Germany's GDP, look, plus 0.8% versus only 0.3% expected in the domestic demand. So when you put that together, you can see Germany's growth has slowed in the Q3. And remember what the ECB minutes were saying, that there's risks to the growth outlook are tilting to the downside. Okay, so the outlook for the euro is starting to weaken here. We've then got the reason Germany's GDP is the most important reading for the Eurozone is the fact that Germany is the largest contributor to the Eurozone's economy. Okay, so in other words, what hits Germany hits the whole zone, and what's good for Germany is good for the whole zone. So Germany's data is eyed very carefully. And we also had the slowdown in exports, which I've highlighted there for you in bold. So you can see that was a further concern. And then we had last week the slowdown on Friday of the PMI manufacturing and service indicators. Now, these are surveys that are conducted, and they ask questions like, are you expecting to see more orders next week? What's your inventory levels like? Are you feeling optimistic about the future? And these readings were down. They were down for France, Germany. You can see here the Eurozone as a whole. The PMIs were down. Obviously, the 50 level is considered strong, and below 50 is weak. But obviously, these figures here in red because they were below what was anticipated and expected. So it was a weaker reading than people were anticipating. So that's important for us to factor in for the ECB. ECB minutes projecting a slowdown in growth and starting to see that in the data. And that will affect, we'll come on to it as we look at the week ahead, that will be affecting some of the outlook of the ECB and obviously their projected rate hike and their projected withdrawal of quantitative, their QE, their asset purchase program. So we'll come on to that later, so don't worry about that for now, but just log that this has happened last week. The other thing that's happened just recently, now this is, the previous information has been bearish, the euro. The euro has been sold on that information. But this morning, there were some positive signs saying that the Italian government have agreed to discuss some lower budget deficit targets. Now, just to give you up to speed on this, what the Italian government have been saying is that they're going to submit a minus 2.4% budget deficit to the EU. The EU have been furious with Italy agreeing to submit a budget which is outside their scope. So they don't accept a budget that's going to be running at minus 2.4% deficit. So there's been a controversy between EU and Italy. Italy have got a new government and they say, we're going to promote the Italian people. We're going to fulfill our promises that we made when we were elected. The EU said, well, we don't accept the budget you're submitting. So there's been argument between the two. So what's been happening is the markets have been quite spooked, thinking, is this really a play by Italy? Do they really want to leave the EU? There's been a big jump in German and Italian yield spreads. And the question that is going to be asked now is this Italian government budget deficit, are they even sincere? Because they might just submit a budget deficit, or they might change the budget deficit and then go, oh, well, what does it matter if we don't exactly hit it? So just to let you know that today there's meant to be a meeting at 6:30. Okay, so this could be a potential relief for the euro. So if the Italian government says we're no longer going to submit a minus 2.4% budget, maybe they say we'll do minus 2%. That would show the market that Italy is wanting to be cooperative with the EU, and you're going to see the euro rally on the back of that. And already we've seen the euro strengthening today on the back of these reports. There's been a series of these reports coming through, trickling through, and that's just a story to be following for the rest of today, particularly for the euro. And if you look, I will come to OPEC in a minute, but if you look at the euro-US dollar chart, you can see, okay, so So you can see here from last night's open, okay, on the 26th here, we've had the euro's been rallying, okay, and it's been rallying on the back of this positive sentiment. So the question is what's going to happen from here, okay? Now, I was actually short the euro on my account, and I was short from up here, and I was shorting trying to hit those daily lows. Now, I've moved my stops in now on the back of this, just above this level here, because if price breaks above here, then that to me is going to be indicative of higher prices potentially ahead. Because the news is significant, I'm wanting to move my stops in, because if the Italians do submit a different budget, the euro is going to rally. So that's the thing to look for today. What do they do? If they suddenly said something crazy like, okay, we're not going to do a budget deficit at all, there'd be a big rally in the euro, and depends how much they deviate from that minus 2.4% level that they have submitted. So that is something for you to keep your eye on. That's something for us to be aware of, and it's coming out at 6:30 today. Key paces of resistance. We have the 50 exponential moving average, which has provided big resistance recently here, here, and here. Another place you'd expect to see sellers on the first retest. You'd expect to see sellers here at the combination of the 50% retracement level from the 24th to September highs, drawn down to the 12th of November lows. And so you've got a nice 50% retracement level there. That would be a key place to find some resistance on a first test of that level. And if the Italians do submit a budget deficit that's reduced, then the first target is the 50, and then it's the 100 exponential moving average there with the first targets for any long positions there. That's just to give you a little background on that. Okay, so we've covered the ECB minutes. We've covered what's making it bullish for the ECB. We can see that slight division now between a bearish and a bullish picture coming up. But obviously the budget deficit is taking priority at the moment because it's really going to be happening soon. One thing to really remind you guys of is OPEC. If you've been following the oil markets, you would have noticed that US crude has been falling heavily. It's been on a real decline in the last sort of 6-7 weeks. And the OPEC are meeting in December. I think they're meeting the 6th of December. And the question is, will they decide to introduce production cuts? Okay, so the reason for oil's fall has been a number of reasons, but some of the primary fundamental drivers have been a reduction in projections for global demand in 2019. It's expected to be a reduction in demand for oil, and there's also expected to be an increase in supply. So those two factors of falling demand and increasing supply have led to a falling oil price. So the thing to look at is going into OPEC's meeting on the weekend, be very careful of holding any positions in oil. And also remember, Canadian dollar is affected by oil, and the US dollar Canadian dollar pair is 96% correlated with oil. So any positions in there you need to be careful of. And the question is, what will OPEC do? Will they agree to reduce production? And if they do agree to decrease production, then depending on what that is, we're going to see a increase in oil prices, depending on how that is to market expectations. And I think market expectations around 1 million to 1.25 or 1.4 million barrels per day reduction in production. So anything that's either side of that figure will affect the oil market. It's just something to be aware. Looking at the week ahead, let's see what's coming up. The first thing, we'll go over to the calendar, and looking at what's coming up, right. So, first of all, just to see that the business climate indicators out of Germany. Now, this is a forward guidance on the situation for Germany, and those figures have come down low. Okay, so just bear that in mind with what we've already mentioned. We had a few ECB speakers coming out. They haven't said anything in particular, although let's check out Draghi at 2 o'clock GMT, because he will be giving us some indication of what the EU will be thinking. Now, remember what their policy is at the moment. They're expecting to reduce asset purchases and finish them in December, okay? And then they're expected to raise interest rates in summer 2019. That is the projected path. So if we start getting a hint of that changing, so say Draghi says, well, we might have to raise interest rates later. We're in no hurry to raise interest rates, or it could be useful having asset purchase longer. Then we're going to see a further weakening in the euro. So just check out what Draghi's saying on the euro and be aware of that. Particularly if you're trading the euro at the moment, be aware of those stories, particularly with Draghi speaking at 2 o'clock. Just to keep that in your minds. Okay, Tuesday. Yeah, Tuesday at 3 o'clock GMT, we have some consumer confidence data out of the US. Now, that is not on the HYCM chart, so I just wanted to, I've got it for you here. This is the US CB consumer confidence. Now, this has been around about 18-year high in the past few months. Okay, so we're expected it to be 136.2, and it's been indicating a real increase in enthusiasm and an increased consumer spending, and it hit a high of 137.9 in October's reading. Now the score for November might be a bit lower. 136.2 is on the card, so let's just see what is the US consumer like. It's something that's going to be important to see if that enthusiasm has carried on in terms of US dollar. I remember, as we've covered in previous seminars, webinars for this week, that the November is usually a very good month for the US dollar. Hasn't been stellar this month at all, but just to bear in mind that there are seasonal pressures. The other thing to be aware of is the Reserve Bank of New Zealand's Financial Stability report. Remember what's happening at the moment with New Zealand? They are on a lower for longer policy. So in other words, the new Governor Orr, he's been less hawkish than the old governor, and what he said is our rate's going to be lower for longer. And just to illustrate that he's less hawkish than the old governor, the November monetary policy statement was a really good illustration, because in the lead up to the November monetary policy statement, there was high GDP, there was good inflation numbers, there was good employment numbers, there was a lower than expected exchange rate, there was lower unemployment figures. So when the Reserve Bank of New Zealand met, they acknowledged that inflation was increasing, they acknowledged the positive signs, but they didn't change their earlier forecasted lower for longer message. Okay, and they said they're okay with there being a slight overhit in inflation. They're okay if there's an overhit in employment, then they're happy for that. So we just got to be aware of that and listening to government, or see what he's saying. Does he change from that perspective? Does he become more hawkish? Does he become a less dovish? Because if you just look at the information in September, the 19th, the GDP was a beat at plus 1% versus 0.8%. In October the 15th, inflation was 0.9% versus 0.7% expected, a beat there. Employment was up 1.1% versus 0.5%, and unemployment was down 3.9% versus 4.4% expected. So you put that all together, you'd expect the Reserve Bank of New Zealand to change that lower for longer message. They haven't. They're staying the same. So look on Tuesday for clues. Is he still lower for longer? Still happy? These are the projections from Westpac out of New Zealand, and their projections are that there isn't going to be a rate hike until next 2020 December. So December 2020 is the next projected Reserve Bank of New Zealand's rate hike. Okay, so that's just to be aware of. And they are expecting a CPI inflation hit of 2.2%. So expecting inflation to get a bit higher, but the exchange rate, the high interest rate to stay the same. So that's just showing the central bank says they're okay with inflation increasing. So that's just something to be aware of, and factor that in as you're reading the reports that come out on Tuesday. Just check, is that message still the same? Now we're going over to Wednesday. And on Wednesday, we have the US GDP. We have the second release. Now, this is Wednesday, 1:30 GMT. Now, the first estimate for US growth for Q3 came in at 3.5% annualized. Okay, so it's not as fast as the second quarter, but it's still a rapid rate of growth. That's a really good growth. But there was some worrying signs in the last data point, like the inventory growth had fallen. The inventory growth has risen, so there was more stock, and there was a drop in exports. So remember this US-China trade war, okay? That's the kind of thing that's going to keep on weighing on the US economy if there's a fear that growth is going to slow down because of the US-China trade war. And so look into the details here of what are the inventories, okay? Is there a drop in, is there an increase in inventories again? What about exports? Is there a drop in exports, or have they increased? Obviously, if exports are falling, that's indicating that global trade is slowing down as well. So that's all going to be factored in to that GDP figure on Wednesday. Thursday, again, very interesting. It's going to be the FOMC minutes, which are coming out 7 o'clock GMT time. And last meeting, the Federal Reserve, they left rates unchanged. The chair of the Federal Reserve, Jerome Powell, they made a few minor tweaks to the statement, but they were sort of downgrading business investment, obviously reflecting this US-China trade war and uncertainty. So the minutes will let us know what concerns the Federal Reserve really had about that slowdown in business investment. Will they also give a hint that a December rate hike is due to come? The market's expecting a December rate hike coming next month, and these minutes will give us a good indication of whether that rate hike will or will not be coming. So eye those minutes on Thursday, 7 o'clock GMT, and that'll give you an indication of what the Federal Reserve is thinking. Finally, Friday, we've got a few decent data points out. We've got Eurozone inflation that's coming out 10 o'clock GMT. We have here, we have the inflation levels. Okay, the odds of a rate hike are going to be falling recently, remember, with the slowdown in euro growth. But this will be a fresh look at some of the numbers for the next, it will give an indication of the European Central Bank's next move. So back in October, CPI rose to 2.2%. It's now anticipated to be 2.1%. Okay, so that's a bit of a slide. If that goes back to 2.2, 2.3%, that's going to be bullish for the euro. If it remains 2.1, or if it hits like 1.9, 1.8, that's going to be very bearish for the euro. So be prepared for that. Also, Canadian GDP is coming out at 12:30, and we have the final event of the week, which is on the weekend, which is the G20 meeting. Now, this is important because this is when global leaders, they're all going to go to Buenos Aires over the weekend, and they're going to discuss current affairs. Now, there's been a very important meeting that's been eyed for some time here, and that is a meeting between US President Donald Trump and his Chinese counterpart, Xi Jinping. So the world's two largest economies, the world's two largest leaders are going to be getting together. Now, the US is set to raise the tariffs on about $200 billion worth of dollars of Chinese goods from 10% to 25% in January. That's the intended course, okay? So sometimes Trump has sounded optimistic about reaching a deal. So we've seen, like, if we look at some of the things he has said previously, We've had, he said he wants to make a deal on trade, may not have to impose further tariffs on China. This is a couple of weeks ago. We'll hopefully make a deal. Trump says China's trade list is pretty complete. Okay, he's made some conciliatory remarks. We saw that when Trump tweeted the fact that, there may not have to be any, it might be able to sort out. There was an immediate relief in the US dollar. Similarly, the S&P 500 rallied when Trump made a similar that tweet. It was a couple of weeks ago. So just to bear in mind, I wanted to show you that if after the weekend, Trump and Xi Jinping strike a deal between US and China, there's going to be a big rally. It's going to be a rally in the S&P 500, and there's going to be a rally in the dollar. Okay, and there'll be a big rally in the dollar yen. So that was just what happened on a tweet. There was this quick spike, and then a White House official said, no, that's not official White House policy. So remember that China's economy has been slowing down due to the trade war. Look, these are the new orders, export orders, manufacturing PMI surveys. So if you look at all that, you can see, look, new orders are down, the new export orders are down, the PMIs are down, everything is falling, okay, because everyone's concerned. And who wants to make a load of orders if you think your goods are going to be taxed by 25%? Because all of a sudden, that's 25% eating into your margin, and you maybe can't be competitive with your goods anymore. So the problem with the taxes and the trade tariffs is it will slow down the whole global economy, and that's what the market is really concerned about. So conversely, if that gets resolved, then there'll be a pretty big relief rally. There'll be a really big relief rally as that takes place. Okay, guys, as you can see, there's a lot going on this week. Now, just want to give you a notice. Tomorrow from 1 o'clock to 2 o'clock, what I do is I do a trading workshop that takes place for an hour. And a lot of the information I've shared with you today is information that gives you a background knowledge on to likely direction of the future of currencies taking place in the coming week. Now, timing that and understanding how to put that into practice is a different skill. So that's why we do another trading workshop. And in this workshop, what I do is we look on an intraday trading basis what the most influential moves have been over the last couple of sessions, and then we start to see significant places where we could enter a trade, how we would manage it, how we would manage it. Now, again, it's not trading advice. You have to be aware of that. Instead, what it is, it's education. It's showing you how you can put some of the knowledge that I've shared with you today. As you develop that knowledge for yourself, it's then to show you how to correctly apply that knowledge and where to enter trades, where to buy, where to sell, where to put stops, what about targets. That's the kind of information that we hear. And Tan, we can also, if we have time, look at some specific questions that you might have as well. And obviously it's an hour workshop, so there's a little bit time to be a little bit more leisurely. But that is 1 o'clock to 2 o'clock. Do make sure that you sign up to that. It would be really good to have you along. And then next week we will have the look ahead on the 3rd of December. So guys, there is a lot to take place. It's nice to see some of you guys at the online trading workshop on Tuesday. If you've never made the jump over, be great. Do come on over and see how we start putting that information into the market and applying it. I hope that's been a good session. I hope that's been informative and helped. If you look in your chat section, you can see how to book your spot on the workshop. So if you look on the go-to webinar, there's a number of great panels, and there's a mark that says chat. If you hit the chat triangle, then there is a link to the HYCM Leveling Up workshop. So as I said, if you want to look at how to put it to practice, do hit that link, book your spot, and then you can be there for the next time. Okay, guys, thank you very much for listening. I hope you all have a really good week. There's a lot of exciting events happening in the market. Don't forget them. Don't get caught out. Keep looking at the headlines if you're trading the pound, and also keep looking at the headlines for today if you're trading the euro, because the Italian government might be out with an announcement at 6:30 GMT tonight. and that's very much likely to move the euro one way or the other. Okay, guys, you have a great week, and I hope to see some of you tomorrow. Goodbye. You're welcome, Nadir. Take care now. Bye.